Welcome, Brandon Griffin here, and aka the Realty Resource. This is everything relevant in real estate really early from the Realty Resource. Please like and subscribe and follow for any questions that you might have. If we get enough questions about any one of these specific topics, I'll go into a little bit more depth later. So please do that. Please like and subscribe and follow wherever you're seeing this. All right, this is the week. It's Friday, April 3rd, and this is kind of the stuff that I think is bubbling to the top, the most important stuff that you need to know. First and foremost, if you have trouble paying your mortgage or rent, it's still the 3rd. Most things are due late on the 5th. So please. A lot of people can't pay their mortgage and rent right now. In fact, Wall Street Journal is saying 11% of all Americans are in the same boat. So the government is suspending foreclosure and eviction activity. However, it does not mean that there's not negative effects if you just stop paying your bills. So please call your mortgage servicer if you're paying a mortgage, if you own, and your landlord or your property manager if you can't pay your rent. You must talk to them first before you just stop. It can affect your credit, and if you're expecting to be able to, transact after this is all over, it could negatively affect your ability to do that. So please call. There are options. SBA loans do start today, so the Small Business Administration has been given the authority to make loans to help those Americans who are in need. That's all through the CARES Act, the Coronavirus Aid, Relief, and Economic Security Act. There's $350 billion in paycheck protection, and that's forgivable to the degree that the employees are retained, and as long as the loan is spent on payroll itself. There's also economic injury disaster loans, and there's a loan advance on that of $10,000. You can do both, but the $10K loan advance is offset in the forgiveness. Not okay. So please sign up today. It's expected that this is going to be a cash grab and that money's going to go quick. Now, there are new loan guidelines. Not all lenders are able to take this kind of risk. They're not all as well capitalized. And even though Fannie and Freddy are backing all lenders basically on the secondary mortgage market, and they're becoming the servicer, it doesn't necessarily mean that all lenders are doing the exact same thing. So things are kind of changing wildly right now. Some of them are requiring the credit score requirements to go up, which is actually causing some people that thought they were qualified to not qualify. Most of them are actually doing a verification of employment at closing now because people are losing their jobs and being furloughed so quickly. Please double check with your lender if you're in a transaction right now or if you expect to transact during this period. You really want to know whether or not they're making changes to their policies that you didn't know about and it wasn't well communicated. Again, things change daily. Plan to stay at home through April. Mayor Michael Hancock said on Tuesday in the Denver Business Journal, they reported it, that it's very likely we'll see this go all the way through the end of April. The Wall Street Journal also said that Colorado is expected to see our peak in our peak level of activity and weight on our healthcare system here by mid-April. So hopefully we kind of have an idea of a timeline for at least us to get out of this. And let's see here, there's 6.6 million new unemployment claims, which brings the total up to about 10 million. Consumer confidence is down, but not as much as I thought it would be. This is relevant because it'll take a little bit longer to recover. I also have seen a couple polls that say 40% of people are going to take longer to go back to some of those things that they used to do in groups of people, like movies, restaurants, flying. But we'll see when the time comes. The showings are down. Sorry, my son. We can almost get this done before his wake time. Showings are down about 60%. Totally to be expected, especially with stay at home. That's actually a good thing for me. I think that we're moving to virtual. So being able to enter offers sight unseen is probably a big thing if you're thinking you want to continue to do a deal right now. Also, we're likely to see home prices drop, but it's not in the way that you might think. So there's a mixed variance. We sell a lot of really expensive homes and a lot of really small homes, and then we start to change how that looks. What you're going to see is the price drop, but not necessarily across all price ranges. So each price range is different, and the highest price range is being hit the hardest right now by everything that's going on, including some of those changes in loans mean that they're not doing jumbo loans anymore. So we will see prices drop. The media is likely to blow it out of proportion. If you really want to know if your home is dropping in price, please contact me. I'm putting all my clients onto a database that will help them. Also, right now, if you were expecting to be able to use an iBuyer like Zillow or Redfin, a lot of them are dropping out because they don't know if they can price properties effectively. So a lot of them are stopping those programs where they'll purchase your property without having any showings happen. So please contact me if you have any questions. We will do a follow-up. Again, please like and subscribe. And yeah, looks like it's time for Sawyer to wake up. Have a good one, guys.